If you've listened to me for a long time, you already know one thing. I don't spend my days worrying about headlines. I worry about fundamentals, and I pay attention when something real begins to shift beneath the surface. And today, something is shifting in the American economy. It's not a market crash. It's not a sudden disaster. It's something quieter, slower. But in my lifetime, these are the things that usually matter most. America is seeing consumer spending weaken, economic growth slow down, and people are increasingly whispering the same word you've probably heard lately, recession. But I want to talk to you the same way I would talk to a room full of young investors in Omaha, slowly, honestly, and without drama, because recessions don't scare me. They never have, and they shouldn't scare you if you understand what's actually happening. So let's walk through it together. When Americans stop spending, the story always starts the same. You don't need a PhD in economics to understand the US economy. All you have to know is this: when Americans feel confident, they spend. When they feel uncertain, they hold back. Right now, people are holding back. Over the past months, retail sales have softened. People are postponing big purchases. Restaurants are less crowded. Small businesses are cautious about hiring. And families are discovering that their savings from the last few years, well, they're not as thick as they used to be. That's not fear. It's caution. And caution always shows up long before a recession does. In my life, I've watched this pattern happen many times. People tighten their belts before the economy does. And every time the same question appears: is this the start of something bigger? Why the American consumer matters more than anything else. People talk about the stock market as if it's the heart of the country. But the real heart, the thing that makes the United States different from almost every nation on earth, is the consumer. 70% of the US homes, groceries, vacations, furniture, clothes, little things, big things. When that slows down, everything slows down. And when I see that happening, I don't panic. I pay attention, because the American consumer is like a canary in a coal mine. It doesn't scream when danger is coming. It goes quiet. Right now, it's going quiet. The silent factors behind the slowdown, the newspapers will give you big headlines, but the real story is simple. Factor F1, high prices have worn people out. Inflation might not be as scary as last year, but people still feel it every time they buy eggs, rent an apartment, or visit the doctor. Factor F2, interest rates are still heavy on households. The Federal Reserve lowered rates a bit, but mortgages are still expensive. Credit card debt is high, and auto loans feel like a burden. Americans aren't broke, they're stretched. Factor F3, savings are thinning out. During certain years, people saved more than they ever had. Today, much of that cushion is gone. When savings shrink, confidence shrinks. Factor F4, uncertainty in the air. People don't know what the next year will look like. Jobs feel less stable. Wages aren't rising as fast. Businesses are cautious. Uncertainty is like fog. You move slower when you can't see far. What most investors get wrong during times like these: whenever the economy slows, you see the same groups react the same way. Panic sellers who dump their stocks at the first sign of trouble. Market prophets predicting the biggest crash in history. Speculators who stop investing and start gambling, hoping a miracle will save them. And then there's the group I've spent my whole life trying to talk to: long-term investors, the ones who understand that the market is a voting machine in the short run, but a weighing machine in the long run. Weak spending does not mean America is collapsing. It means America is adjusting, and adjustments create opportunities. what a slowing economy means for investors in my career. Every recession, without exception, has done the same thing. It punished the impatient and rewarded the disciplined. When people stop spending, companies earn less and their stock prices fall. When prices fall, fear rises. And when fear rises, the best businesses in the world suddenly go on sale. This is why I never bet on the economy. I bet on American resilience, and I bet on quality companies at fair prices. Let me tell you something I've said for decades. Be fearful when others are greedy, and greedy when others are fearful. Well, right now, people aren't fearful yet. They're uneasy. And unease is the early stage of opportunity. The difference between a slowdown and a crisis, a lot of people use the word recession the same way kids use the word monster. It sounds scary, but if you shine a flashlight on it, the shape is never as big as you imagine. There's a difference between a slowdown, a technical recession, and a financial crisis. A slowdown is just the economy taking a breath. We're in that phase now. A recession is when that breath lasts a little longer. It's normal. It's healthy. It clears out the weak players and rewards the strong ones. A crisis is when the system itself is in danger, and we're nowhere near that. Banks are stronger. Corporate balance sheets are healthier. The job market is softening, but not collapsing. Consumers are cautious, not desperate. This is not 2008. It's not 2001. It's not the 1970s. This is simply the cycle doing what cycles do. The smartest thing you can do right now, if you ask me what to do in a slowing economy, I'd give you the same advice I give my own family. One, strengthen your financial foundation, pay down expensive debt, build cash reserves, don't get overextended. Two, keep buying quality assets slowly and consistent, not every day, not recklessly, but steadily. Three, ignore predictions. Nobody knows the bottom. Nobody knows the perfect time, not me, not economists, not the news channels. Four, study companies, not headlines. A business with powerful earnings, strong management, and real value will still be a great investment 10 years from now. Five, understand that fear creates bargains, but caution creates signals. Right now, America is full of signals. The silver lining people always miss. Every slowdown I've lived through had something in common. It revealed the leaders of the future. When spending weakens, weak companies collapse, but strong companies endure. They adapt, they cut costs, they rethink their strategy, they innovate. Think of the greatest businesses of our lifetime. Many of them became world-class because they were forged during slowdowns. Sometimes the best time to plant seeds is when the wind is the strongest. And this period right now is one of those times. What I believe will happen next now, I don't give predictions, but I do understand patterns. Here's the pattern I expect. Spending will remain soft for a while. GDP growth will wobble. Recession fears will rise. Politicians will argue. The media will have a field day. Some investors will panic, and quality businesses will keep making money. Then, slowly, confidence returns. Consumers spend again. Jobs recover. Growth stabilizes. And the investors who stayed calm look back and say, I'm glad I didn't lose my head. That's how the cycle works. That's how it's always worked. So if you're worried about slow spending, weak growth, or recession headlines, take a step back. Remember this: America has been through world wars, depressions, market crashes, and political chaos, and it always came out stronger, not because of government decisions, not because of central banks, but because ordinary people kept building, working, and striving for something better. The American consumer may be slowing down today, but the American spirit isn't. And if you invest with patience, discipline, and common sense, you won't just survive this moment. You'll be ready when the next wave of opportunity arrives. because opportunity always arrives, always. And when it does, I hope you're ready to buy.